Today we're looking at dividend aristocrats that are traded in the industrial sector. There's presently 13 companies that meet that criteria, but we're only going to review 7 of them today. And the reason we're not looking at all of them is because honestly, some of them are just at risk of performing badly, are currently performing badly, or have negative returns overall, and I just don't want to waste your time. But I promise at the end to share the full list with you, just in case you're a little bit more of a risk taker than I am. But before we delve into this list of 7, let's talk quickly about what actually is a dividend aristocrat. And these are companies that have been paying and growing their dividend for a minimum of 25 years. They have to be part of the S&P 500 and they have to meet certain liquidity requirements. And today's companies don't disappoint. They range from paying dividends from 25 years, and there's actually one company on the list that's been growing their dividend for 66 years, which is pretty impressive. I think the lesson in today's dividend stock review is don't chase yield, and you guys will see why shortly, especially if you have a longer time horizon. Here are the criteria I use to sort through these 13 industrial aristocrats. Again, 25 years of dividend growth, a 5-year dividend growth rate of greater than 5%, a payout ratio less than 60%, and 5-year total returns that were greater than 75%. If you're new to dividend investing, total return is inclusive of any share price appreciation with any dividends received reinvested. And we're going to review these companies in order of the smallest 5-year total return to the greatest, which is super impressive, so hang in there with me. We're going to start here with Roper Technologies, whose name was actually changed from Roper Industrials in 2015, as it sold its majority stake in its industrial businesses. So depending upon where you do your research, it is still listed as part of the industrial sector, but they are heavy on the tech side of things, designing and developing software. Roper Technologies offers multiple different businesses, and you can see all the different companies that they've got their hands in right now. This company offers precision rubber and polymer testing instruments, data analysis software, ultrasound accessories, testing and analyzing plastic solutions, dispensers and metering pumps, control valves, precision weighing equipment, and it goes on and on and on. We're here on Seeking Alpha, and we're going to look a little further at the dividend metrics for Roper Technologies. We can see right now they're trading for $443.87. Year to date, they're down in share price by 6.55%. But looking at that PE of 31.39, I would like that to come down significantly before I personally would enter into a position with this company. You can see the dividend yield is only 0.62%. Let's look a little further at their financials. We are consistently growing our revenues. Looking at the basic earnings per share, you can see they have some steady increases there. 2019 was a banner year for them. And in the trailing 12 months, they're actually looking at $27.44 per share right now. Looking at the dividends per share, you can see here that they've consistently grown this dividend. And right now, in the trailing 12 months, they're giving $2.48 a share. We've got some solid dividend grades overall, of course, with the exception of that dividend yield at 0.62%. But we've got an A+ in safety, consistency, and an A- in growth. We have 25 years of growing that dividend. The 5-year dividend growth rate looks pretty good at 12.12%, and the payout ratio is only 16.4%. And here's a quick snapshot of the total return in the last 5 years for Roper Technologies, and they are at a 76.83% total return, which is beating the S&P 500. The next company we're looking at is Expeditors International, and this is an air freight and logistic company founded in 1979 that operates out of Seattle, Washington. Not only do they support businesses here in the Americas, but they also provide logistical services to South Asia, Europe, the Middle East, Africa, and India, giving you some international exposure. They're presently trading for $115.52, and year to date, they're down 11.68% in share price. The PE is among the lower ones at 12.94, and they've got a dividend yield of 1.16. Looking at their income statement, we can see they've got growing revenues. Their basic earnings per share is also growing, and then trailing 12 months, we're looking at $9.60 per share. We also have consistent increases in dividends per share. The trailing 12 months offers $1.25 per share. And that's why you can see that payout ratio is so low. Dividend grades are strong, A+ in both safety and growth, and A in consistency. Again, the yield is on the lower side at 1.16%. They actually have 29 years of dividend growth. It looks to be there's an error here in Seeking Alpha, and a 5-year dividend growth rate of 9.79%. And looking at the total return for Expeditors International, you can see that in the last 5 years, they are up 89.24%. The next company we're looking at is Caterpillar, synonymous with backhoes, pavers, utility vehicles, heavy equipment. Caterpillar was founded in 1925, but did you know they also operate a financial product segment as well? They've got a portfolio of about 20 different brands, and they're supporting multiple different industries around the world. And here you can see all the different Caterpillar brands, and there are just about 20 different brands that they are operating within. Currently trading for $236 a share, they are up year to date in share price by 14.07%. They've got a PE that's 17 and a dividend yield of 2.03%. In terms of total revenues, we got a bit of a roller coaster here for Caterpillar, but from 2020 to 2021 and now in the trailing 12 months, we've seen a nice increase in their overall revenues. Basic earnings per share has also been a rocky road for Caterpillar, but we have seen some growth in the last couple of years from 2020 to 2021, and in the trailing 12 months, we've seen another jump up to $13.85 per share. Looking at the dividends per share, we've seen a very steady increase over the last 10 years. Trailing 12 months has us at $4.62. If we pop on over to the dividends tab, we can see that we've got some solid grades overall. We've got B pluses in safety and growth, a B in dividend yield, and an A plus in consistency, because Caterpillar has been giving and growing that dividend for the last 29 years. We've got a 5-year dividend growth rate of 8.31%, and the payout ratio is 36.38%. Looking at the total return in the last 5 years for Caterpillar, we can see they're at 90.67%, shown here in the orange, handily beating the S&P. Dover Corporation was founded in 1947 and is headquartered in Downers Grove, Illinois. They're a global manufacturer operating 5 different segments of their business: engineered products, clean energy and fueling, imaging and identification, pumps and process solutions, and climate and sustainable technologies. Let's look at Dover's metrics, and we can see here they're currently trading for $143.49. Year to date, they're down in share price by 19.54%, and the forward PE right now is 17. They've got a dividend yield of 1.41%. Looking at total revenues, we can see that Dover had a dip down in 2020, but is recovering nicely in 2021, and in the trailing 12 months has continued to grow their revenues. Basic earnings per share has been on the rise since December of 2018, and in the trailing 12 months, they're earning $8.11 for each share. Looking at the dividends per share, they've got a nice increase year over year and are presently paying out $2.01 per each share that you own. Some solid grades overall for Dover Corporation, the only outlier being, again, that dividend yield, which Seeking Alpha is giving a C. We've got A's in both safety and growth and an A plus in consistency because we have 66 years of dividend growth. We've got a 5-year dividend growth rate of 6.47% and a payout ratio of 24.81%. And looking at the total return for Dover Corporation, we can see in the last 5 years they are up 102.29%, shown here in the orange. Next up is Grainger, ticker symbol GWW, and they are a leading distributor of industrial and safety supplies to the United States, Canada, Japan, the UK, and internationally. They're operating in 2 different segments, and they offer safety, security supplies, material handling, storage equipment, pumps and plumbing, cleaning and maintenance supplies, and metalworking and hand tools. The company was founded in 1927 and is headquartered in Lake Forest, Illinois. Grainger is currently trading for $602.08. Wow, that's really high. Year to date, they are up in share price by 18.01%. They've got a forward PE of 20.58, and the dividend yield is 1.14%. Looking at their overall revenues, you can see that they are climbing year over year. And along with that revenue growth, they've got basic earnings per share that have continued to grow as well, with the exception of a dip down in 2020. But in the trailing 12 months, they're at $28.31 per share. And looking at the dividends per share, you can see that that has continued to grow in the last 10 years as well, and they're presently offering $6.68 for each share that you own. Some really solid grades overall in terms of their dividend safety, growth, and consistency. They're all issued an A plus when compared to their peers in the industrial sector. They got a C minus for that dividend yield, again, because it's only 1.14%, but we have 51 years of dividend growth, a 5-year dividend growth rate of 6.03%, and a payout ratio of 23.88%. And here's why I was saying earlier, don't chase the yield, because look at this total return for Grainger, 188.69%. And that's that orange line going up and to the right in the last 5 years. And the last company we're looking at is Cintas Corporation. They serve the United States, Canada, Latin America, and they operate through uniform rental and facility services, first aid, and safety. Founded in 1968, it's headquartered in Cincinnati, Ohio. Now let's take a peek at their metrics. And here's another company with a pretty hefty share price at $462.53 right now. Year to date, they're actually up in share price of 9.06%. The PE is crazy high at 36.82. Not a position I would enter into right now, but let's take a peek a little further at the metrics here because you might be pretty impressed with what you see in terms of the total return for Cintas. The dividend yield right now is only 0.99%. 211.40% in total return in the last 5 years. Check out Cintas. Pretty impressive. I really would like for that PE to come down and that share price right along with it. Okay, now let's pop back on over to the dividends. And some pretty solid grades overall for Cintas with the exception of dividend yield, which is only second to lowest compared to Roper Technologies. But we've got a 20.99% dividend growth rate in the last 5 years. Disregard the 11 years listed here of dividend growth. It is actually 38 years of dividend growth, and the payout ratio is only 34.33%. Now, as promised, here is the list of the 13 different companies that are traded in the industrial sector that all qualify for that Dividend Aristocrat status. Now, you can see there's a couple companies there, Expeditors as well as Cintas, that have an asterisk next to their number of the years of dividends, and that's because there's a conflict between what is actually listed in Seeking Alpha and what I have found elsewhere, and we do know that they are both considered Dividend Aristocrats. But you can see Stanley Black & Decker at risk of performing badly with a 5-year total return of a negative 46%, and 3M, we all know there's some litigation pending for 3M right now. Their 5-year total return is in the negative at negative 36.91%. But I wanted to share my total research with you all. Everyone has a different risk tolerance and a different time horizon. And you might be willing to take a risk on some of these companies that maybe I might not be. So I wanted to share the full picture with you all. Now, this video is actually part 6 in my Dividend Aristocrat series, so you probably should check out the most recent video on the financial sector next by clicking right here, and I'll leave a link to the playlist in the description below.